Let me share the top 5 dividend stocks you can buy as an inflation hedge and hold forever. The first dividend stock as an inflation hedge to buy and hold forever is Medtronic, ticker symbol MDT. This stock falls in the healthcare sector, and one thing I need to mention is that Medtronic is a dividend aristocrat. In fact, all 5 of the stocks that I am going to talk about belong to this category. A dividend aristocrat, if you don't know, is a company in the S&P 500 Index that not only consistently pays a dividend to its shareholders but annually increases the size of its payout. A company will be considered a dividend aristocrat if it raises its dividends consistently for at least the past 25 years. Medtronic is a medical device company that primarily operates in the United States. Now, healthcare companies can be safe to invest your money in over the long term, especially when you're looking at one of the largest ones in the sector. Medtronic's business is also diverse, ranging from insulin pumps to surgical tools, cardiac devices, and many other products. Plus, the shares pay an above average yield. At 2.3%, it's paying well above the S&P 500 average of 1.4. So on a $10,000 investment, that can mean an extra $90 in annual revenue. That may not seem much, but over time, it can accumulate, especially since Medtronic is a dividend aristocrat. The company has been increasing its dividend payments for 44 years in a row. Medtronic pays a quarterly dividend payment of 63 cents, which is 47% higher than the 43 cents it was paying out 5 years ago. This averages out to a compound annual growth rate of 7.9%. Medtronic's most recent dividend hike was an 8.6% boost last year from 58 cents to its current value. That is why Medtronic could be an ideal dividend stock for risk-averse investors to invest right now. If you're liking this video so far, I would really appreciate if you hit the like button. The second dividend stock as an inflation hedge to buy and hold forever is Procter and Gamble, ticker symbol PG. Procter and Gamble belongs to the consumer staple sector of companies. This giant has an easy to understand business that can do well during economic growth cycles or even during contractions, with at least 50 consecutive years of dividend increases, making it a dividend king. Vicks, Gillette, Pampers. If you look around in your house, you will easily find dozens of products from P&G. These are the products that households buy on a regular basis, regardless of what the economy is doing right now. In April, the board of directors announced a 5% increase to the quarterly payout, making the company's 66th consecutive annual dividend hike. It's not hard to see why the company is able to maintain such a streak. Thanks to a recession-proof nature of P&G's business, it can deliver reliable dividends even in difficult economic times. The company is buying back more stocks than ever before, with a dividend yield of 2.3% growing since the past 66 years makes this stock a buy and hold forever in my book. The third stock as an inflation hedge to buy and hold forever is Caterpillar, ticker symbol CAT. This stock falls in the industrial sector and has been consistently increasing its dividend since the past 29 years. Its resources segment, which includes mining, saw a year-over-year sales surge of 30% thanks to a staggering 55% increase in the North American revenue and a 33% increase in Asia Pacific revenue. The company is best known for its construction equipment, but it's not just about the construction equipment. Caterpillar sales are driven by the commercial, government, and retail construction markets. If countries increase investment in mining commodities, energy, and railroad networks to support infrastructure development, then Caterpillar is likely to benefit from it everywhere in the world. Did you know that Caterpillar has more than 500 autonomous trucks operating worldwide? And this isn't new for them. Caterpillar has been investing in autonomous development since the 90s. So this company is not lagging behind, and the fact that they are working on autonomous technology is a testament to their innovative thinking. The dividend yield of 1.5% might be on the lower end, but it's still higher than the average, in addition to a strong growth in the stock value. The fourth dividend stock as an inflation hedge to buy and hold forever is Realty Income Corporation, ticker symbol O. This stock falls in the real estate sector and is a real estate investment trust or a REIT. Realty Income is one of the 4 REITs holding the prestigious title of Dividend Aristocrats. This stock pays monthly dividends, making it an ideal long play for building a reliable passive income. April 2020 marked its 622nd consecutive month of dividend increases, with a dividend income of just over 4%. Realty Income focuses on developing single-tenant properties and leasing them out under long-term leases, which require the tenants to bear most of the operating costs. These leases generally last up to 10 years. Realty Income primarily serves retail industry. However, its recent acquisitions, including the sale leaseback purchase of the Encore Boston Harbor Resort, give reason to believe that the company is pivoting its portfolio in order to grow and add value to its shareholders. The fifth dividend stock as an inflation hedge to buy and hold forever is Automatic Data Processing, ticker symbol ADP. Automatic Data Processing is a leading provider of business services, with the company offering payroll, human resources, and other business-related services to its client, and the stock falls under the information technology sector. ADP has more than 700,000 corporations among its customer base, and this $85 billion company generates nearly $16 billion in annual revenue. ADP revenue has a compound annual growth rate of 4.9% over the last 5 years and 3.9% over the last 10-year period. This stock has raised its dividends for 47 consecutive years, which places it among the Dividend Aristocrats. ADP is just 3 years away from joining the Dividend Kings, which are those companies with at least 5 decades of dividend growth. The company has managed to reach these heights of dividend growth because of its business model. It works in all manners of economic environments. Even in recessions, the company's business has improved and the dividend has been raised at higher levels. The company's payout ratio is incredibly consistent with their averages. At a dividend yield of approximately 2%, this Dividend King is definitely a stock to buy and hold forever. Investing is a long-term game and wealth is generated with time, but it's not always like that. So in this video, I talk about investors and traders and the myths of exponential gains. So thanks for watching, bleib gesund, and I'll see you in this video.